We're working to give the American people a giant tax cut for Christmas. We are giving them a big, beautiful Christmas present in the form of a tremendous tax cut. It will be the biggest cut in the history of our country. It'll also be tax reform, and it'll create jobs.
In 2017, President Trump passed the Tax Cuts and Jobs Act that introduced the largest reform made in the last 30 years. It was intended to benefit all classes, but the wealthy were given the upper hand. The act gave permanent tax cuts to corporate profits, investments, and estate tax. Companies also saw huge gains from the cut on the corporate tax rate, dropping it from 35% to 21%. The law did retain the old tax bracket structure, but saw certain rates lowered. The top rate fell from 39.6% to 37%, while the lowest bracket remained the same at 10%. The president's new tax law has not positively affected small businesses in America because they have given more incentive for people to join large businesses that can cover the costs of business expenses and memberships. It also raised the cap on the amount of expenses businesses can write off as deductible. For example, before the new tax law went into effect, businesses could expense equipment up to $500,000 under Section 179 of the tax code, but now it is doubled to $1 million. Even worse is that more and more companies are getting away with paying no taxes. In 2017, 40 companies avoided all federal income tax totaling $10.6 billion, while in 2018, 60 companies avoided taxes. If those 60 companies paid their statutory 21% federal tax rate, then they would owe $16.4 billion in federal income taxes. In fact, the government owed them a total of $20.7 billion in rebate.
Inequality is worse than we know. The super rich really do avoid taxes by using legal loopholes. The uber wealthy have finessed their taxes by disguising gifts as loans, inflating invoices to make other gifts look like business income, and assessing properties at wildly different values, sometimes within weeks of each other, to minimize their tax bill. Companies have opted to move profits to tax-free havens in other countries. Companies like Amazon and Netflix have shifted their profits to show up in low tax jurisdictions such as Switzerland or the Cayman Islands. These profits cover as much as 40% of all multinational profits and 50% of U.S. ones. For perspective, U.S. companies report more profits in Ireland, the top tax avoidance destination in the world, than they do in China, Japan, Germany, France, and Mexico combined. One of the main problems with the wealthy is that it is hard to tax their investments in shares. As Warren Buffett once stated, he pays fewer taxes on a percentage basis than his secretary and other employees since the bulk of his wealth is in stock rather than wage income. In order to combat wealth inequality, there must be a change to tax brackets and the ultra-rich.
Support against the super rich has readily increased since Trump's 2017 tax cut. In 2019, 75% of likely 2020 voters supported raising taxes on the rich. The support from the majority extends between political parties with 90% of Democrats, 70% of independents, and 60% of Republicans in favor of higher taxes for the rich. There is overwhelming support for raising taxes on those earning $625,000 or more, with 77% of voter approval, and 62% of voters are in support of repealing President Trump's Tax Cut and Jobs Act, including 39% of Republican voters. The federal tax system relies on a number of different types of taxes to generate revenue. The largest sources of funds are the individual income tax and payroll tax. Approximately 86% of tax revenue is generated through these taxes. Reduced tax rates could boost saving and investment, which would increase the productive capacity of the economy. However, studies have shown that this isn't necessarily true. Data collected over 25 years by the Bureau of Labor Statistics shows that high-income earners spend much less for every tax dollar saved than low-income earners. Further, a 65-year study by the Congressional Research Service showed that economic growth was not correlated with changes in the top marginal tax and capital gains rate.
Loopholes and Deductions Bill. Our solution is to fix the federal tax system to make the richest 5% pay equal taxes compared to the rest of the population by raising the federal income tax. Also, our goal is to close tax loopholes, create a cap on write-offs, and build a system that monitors overseas funds and investments to regulate big corporations and terminate their schemes to avoid paying taxes. Raising the income tax results in additional revenue to pay for public programs and services. Federal programs such as Medicare and Social Security are funded by tax dollars. Infrastructure such as state roads and interstate highway systems also require taxpayer funding. To fund these programs, the income tax for the bracket of 518,401 would see an increase in their tax rate from 37% to 48%. The bracket below would have a tax rate of 39% instead of 35%. Incomes from 9,876 to 40,125 would be taxed 11%. Income earners 40,126 to 85,525 would be taxed 22%. Earners from 85,526 to 163,300 would be taxed 27%. Earners from 163,301 to 207,350 would get taxed 35%. Earners from 207,351 to 518,400 would be taxed 38%, and 518,401 and on would be taxed 45%. While on paper, this will increase the money that the government collects from income tax, the top 5% will continue to avoid paying large chunks of their taxes through loopholes and write-offs. Although there are many loopholes that exist and new ways of avoiding taxes will always be found, we hope to shut down the most frequent use of loopholes in the system. One way tax evasion exists is through offshore havens, which occur on a huge scale. A recent study by the Tax Justice Network found that approximately 21 trillion is currently being hidden in offshore tax havens. Our solution would be require all publicly traded companies to share key financial data on country-by-country basis. The financial data would have to be publicly disclosed and would include companies' income taxes paid, revenue, number of employees, and capital in each of the countries in which they operate. This would allow transparency to our tax system by allowing the public, media, and even tax officials to know whether major corporations are paying their fair share of taxes. The final part of our bill deals with corporate deductions. We plan to implement a bracket system on all write-offs. This will prevent companies from double dipping with deductions, such as travel expenses as company losses for Amazon. Corporations will only be able to tax a maximum of 20% off of their total tax rate. This will prevent companies from writing off huge portions of tax. It will maintain a competitive global market because it will allow American companies to challenge foreign companies. Based on our estimates, these changes to tax could raise about $4.35 trillion over the next 10 years. With the accumulated money from the super rich tax and the corporation write-off caps, we hope to see an increase in education and an increase in small business. Our main priority is education and removing tuition fees. And this will have an even more positive effect because, as seen in the 1940s with the GI Bill granting free education to all World War II servicemen, the following decade, the United States experienced technological and economic growth.